Hi, this is Rony Mullick, and you're watching the post-market show. And today, the market has continued its fall. In the morning, we were seeing that the Asian markets were trading in the green, and they were going higher because the Chinese government they have reduced uh, the lending rates, the loan rates over there, and that was why the markets were higher. But SGX Nifty was also indicating 20 or 30 points gap down, but our markets over here opened with a huge gap down, and then there was a severe selling from the first minute in Nifty. So Nifty, Bank Nifty both ended significantly in the red, and all the gains were wiped off. If you look at the charts again in the daily chart, we see a huge red candle forming in Nifty for the second consecutive day, and all the gains in the last 1, 2, 3, 4, 5, 6 trading sessions were wiped out in just 2 days. And that is the nature of bear markets. Whenever the markets falls, it falls significantly, and that is exactly what you are seeing in the charts and what happened in the last 2 days. So coming to the intraday analysis, so Nifty obviously fell by almost 1.5%, another 267 points down today as well. So you can see the first candle the markets opened below 17,700, and then there was a huge sell-off. 17,635 was broken in the first candle itself, and the markets continued to trend downwards, and ending in the somewhere in the low of the day. And again, Nifty could not hold 17,500. It closed at 17,490. So definitely bearish. Back Nifty again fell by close to 700 points today as well, but the majority of the fall came in the first half of the morning. The rest of the day it was just consolidating in a very tight range. Bank Nifty down by 1.77%, so another 700 points fall in Bank Nifty. So markets were looking very, very weak, and this time we know the reason is not the US market, but it is the German markets. And we have talked about the German producer price inflation coming in on Friday, and that is exactly from where the market started falling on Friday. So it was 0.6% in the month of June, and in July it shot up to 5.3%, and this is being attributed to the Russia blocking the supply chain, and that is why the prices of fuel and other things are increased by significant amounts in Germany, and that is causing this huge sell-off in the German markets. We will be coming to the German markets, but let us look at the other things in the market today. The sectors: Nifty mid caps fell by 2%. Nifty small caps did not fall that much, down by 0.9%. And sectoral indices, nothing to say. Absolute bloodbath in the market. Whichever sector you pick up, whichever stock you pick up, all of them ended in the red. So nothing much to say over here. Nifty metals were the weakest, almost 3% down. Then we have Nifty PSU Bank Index down by 2.1%, and other things, Nifty IT down 1.86%. So nothing much to say. It was an absolute bloodbath, like I said. So if you want to look at the sector which did better than others, so that is the Nifty FMCG sector. It is down by just 0.13%, and we know in times like these the FMCG sector stays strong. So ITC, Hindustan Unilever, Britannia, Colgate Palmolive, Tata Consumers, these were the stocks which traded firmly. And interestingly, Reliance Industries did not fall today, and that's a Nifty heavyweight. So if Reliance Industries fell, the markets would have fallen further. So good to see Reliance at least supporting the markets by not falling. Coming to Nifty contribution, you can see except ITC, Tata Consumer, all the sectors, all the stocks actually contributed negatively to Nifty today. ICICI Bank, HDFC Bank, HDFC. So HDFC Twins, ICICI Bank, Infosys, L&T, Kotak Bank, all of them have been the Nifty's top losers, including Tata Steel from the middle index, fell by 4.5%. So significant fall happening at Tata Steel. It is at 105.2 in a matter of just 2 days. 2 trading sessions, it was close to 113.14, and now it is at 105. So things are looking bearish. Obviously, there's a huge sell-off happening in the market because today FIIs, DIIs both have been net sellers. FIIs have sold for 453 crores today after continuously buying for the last 2 weeks. Today they have turned into net sellers, and DIIs have been selling for the last few days, and today they have sold for 85 crores. Nothing significant, but still they have been net sellers for the day. Now coming to the other stuff, the global markets, definitely. So global markets, like I said, German index is the index that is causing the world markets to panic. And today again you can see a huge red candle forming. German index down 2.3%, and if you look at the fall, so right from the first candle it started falling. There was some recovery, again it fell and ended somewhere near the lowest point of the day. So German index looking really weak, and French index along with German index also fell by 1.8%. UK 100 is looking flat right now, but US markets are having there's huge panic in the US markets. Nasdaq is below 13,000. It's fell by 286 points again today, and Dow Jones fell by another 500 points today. So huge gap down in the US markets. Dow Jones down by 1.5%, Nasdaq down by 2.2%, and S&P 500 also down by 1.7%. So US markets are looking quite weak because of the sell-off that is happening. So right now the US VIX has shot up significantly. It is up by almost 13.5%. You can see a huge gap up, and VIX is continuing to shoot up. India VIX also has increased today. It is at 4%. It is at 19.03. Crude oil prices remain stable at $90. So at least that is not increasing, but the panic is there in dollar index. So DXY is at 109 right now, and you know the high, all-time high is at 109.20. It is now at 109.00. So definitely keep an eye out for dollar index. If this starts shooting up, definitely there is more pain in the markets, more panic to be there in the markets as well. So unless and until dollar index comes down, we will not expect any kind of recovery in the markets. So right now things are looking pretty much bearish. SGX Nifty is also indicating another gap down tomorrow. 17,740 is where it is trading at, and so things are looking pretty weak. And if you look at open interest data, people have closed their eyes and sold call option right from 17,500, 17,600, 17,700. All the strike prices above have been sold. So there is almost a negligible chance for the markets to recover and reclaim its 18,000 levels by this expiry. And put call ratio is at minimum. It is at 0.6, which indicates huge amount of bearishness in the market. Same with Bank Nifty, put call ratio is at 0.6. Massive amounts of call have been written. So Bank Nifty also looking pretty weak. So Bank Nifty, the people are selling puts far away at 37,000, and just 2 days are left for expiry. So that is 3 days left for expiry. So that is the amount of panic that there is in the markets. And in case of Nifty as well, people are selling 17,000 put option to be safe, to be on the safer side. So maybe the markets can come close to 17,000 as well. Who knows? The way the markets are falling, you never know where it is going to stop. So coming to price action levels, so the levels you should be watching out for is definitely, I'll talk about the major levels, because the markets, the way they are falling, they are not respecting any small levels. So the major levels, 17,450 should hold. If that is broken, 17,220 is what you can expect in the coming days, and finally 17,000 is the level. So for tomorrow, I'm expecting 17,220 on the downside, and on the upside the chances are very less. If today is high, say 17,690 is broken, then you can expect markets to at least consolidate. But again, like I said, till this expiry, chances of recovery, a V-shaped recovery, is very less. So that is Nifty for you. And Bank Nifty, same thing, huge gap down. So Bank Nifty 38,000 is what I'll be looking at. If that is broken, 37,630 is where you can expect the markets to take support for tomorrow. And on the upside, 38,740, today's high, is going to be important for the markets. So right now the markets are looking pretty bearish, as I've told you, and this was fine. This is a profit booking coming into the market, some sort of correction, if you might say, and this is definitely healthy. We have talked about this multiple times. Markets do not go up in straight line, and if it does, the fall is even severe. So you can imagine just 2 days, almost 500 points wiped out in Nifty. So there is a kind of fall which comes in the market if the market is stretched to a high level. So right now, the way things are looking, obviously things are bearish, but in the coming days, people, those who are shorting, they can look to book their profits, and that will be an immediate bounce in the market. The markets can go up slightly, but do not be mistaken, this is not an opportunity to buy, because in this pullback, people will short it even more, and that will bring the second leg of rally. So once that is over, and if the market shows signs of recovery, that is exactly the time to get long and buy the stocks. So right now, if there is a pullback, slight recovery, do not immediately go and buy. Wait for a few days. There could be a second leg of selling, and most likely there should be, and then if it recovers, then it is the right time to buy. So I will be obviously sharing my views in the videos, so keep following it. So until that time, let us see where the US markets fall, because it's already pretty weak, and let's see how much it can fall. And tomorrow, the Asian markets, how things are going on over there, we have to watch out for that as well. So until that time, have a very good night, and thank you for watching.